Do you want to invest but are a little worried about the recession? Do you know that there is a recession-proof investment? Worry no more because today we will show where you can safely invest even during the recession. With everything that has been happening since the pandemic, then there's inflation. Securing our investment is a must for our future self or future family. The COVID-19 outbreak has quickly and severely slowed the economy. Most analysts believe that the American economy is now in a recession. However, it is still being determined how long it will persist. Even when the short-term economic outlook is unfavorable, you should stop investing and saving. To ensure that you're positioned as recession-proof as possible, you should take a second look at your portfolio. Markets can always be unpredictable, and no investment is fully immune to a downturn in the economy. Still, some assets have historically shown to be more durable than others. Here are some investing choices to consider if you want to protect your money against recessions. Number 1. Stocks of pharmaceuticals. Healthcare equities, which include pharmaceutical companies, are usually seen as defensive, along with other sectors like utilities. This is because even in times of economic distress, individuals still need access to healthcare and medications. If you take blood pressure medication, you likely won't quit taking it when a recession hits. You're more likely to continue taking your prescription even if you have to find a different way to pay for it. This and countless more instances show how healthcare stocks can still be profitable investment even during a recession. Number 2. High yield savings account. The best long-term investment for your money is not a high-yield savings account. Still, it can be a fantastic spot to ride out unpredictable economic times. Many high-yield accounts continue to give more than what you'd get in a typical checking or savings account, even in a time of nearly zero interest rates. Additionally, by doing so, your money will be secure during a recession when you require emergency funds to assist you through trying times. Number 3. Tech-related stocks. Not always are technology stocks thought of as a traditional defensive move during a recession. But given that more individuals than ever before ever working from home, technology has so far shown to be a crucial and effective link. Many tech stocks are holding up and will make strong long plays because of Netflix binges, Amazon purchases, and Zoom connections with loved ones and co-workers. Number 4. Food markets. Due to their low profit margins, grocery businesses can be risky investments. However, grocery businesses frequently experience increased sales and profitability during recessions. Customers tend to buy more groceries and eat at home when they reduce their restaurant spending. People still need to eat even in the deepest recessions, and grocery shops offer this essential service at a lower cost than restaurants. Number 5. Travel and recreation businesses. Businesses that have to do with the travel and leisure industry, including hotels, airlines, cruise lines, and internet booking platforms, depend on a healthy economy to make money. Consumers typically cut back on discretionary spending when times are tough, which may be particularly damaging to the travel sector after a pandemic that severely impacted the sector. However, there is a huge demand for travel from consumers. As the economy struggles to recover from recession, canceled reservations are expected to be made up. Number 6. Priceless metals. When the stock market is falling and there is general economic unrest, precious metals like gold and silver are frequently in demand. Precious metals are chosen because they are regarded as a store of value or something that investors can physically cling onto. While the value of their intangible assets, such as stocks, declines. Since gold doesn't offer a dividend, it becomes more appealing when other investments aren't producing much income. Gold tends to climb when interest rates are low. Precious metal prices fell early in the COVID-19 sell-off as investors scrambled to find any avenue to raise money. Gold has, however, wonderfully recovered since that time. Number 7. Residential rentals. The housing market could be more recession-proof as an investment. In reality, property prices typically decline during severe economic calamities. However, due to their passive income, rental properties can still be defensive in economic downturns. Chances for landlords of rental homes might get better, because prospective homeowners may elect to rent instead till the crisis ends, and there would still be a demand for housing. Whether or not you're purchasing during a recession, the same cautions apply when selecting a rental property, such as selecting an in-demand property in a prime location and being aware of the effort and hazards associated with owning a rental property. Number 8. Deposit certificates. Regarding security, certificates of deposit fall into the same category as savings accounts. Both are covered up to $250,000 per depositor by the Federal Deposit Insurance Corporation. However, a CD frequently locks in cash for a predetermined period, making it difficult to access the money. Standard savings accounts normally pay lower rates than CDs, which may pay as much as more than high-yield savings accounts. A CD is an excellent place to ride out a recession and keep your money safe until you can reinvest it into investments with better return potentials if you don't need that money soon. Number 9. U.S. Treasury Bills. Regarding secure investments, U.S. Treasury bonds are the industry standard because these securities are backed by the full trust and credit of the U.S. government. The U.S. Treasury will ensure that you get your interest and principal payments. Your risk of default is almost zero, but if you sell your Treasury bonds before they mature, you will be subject to interest rate risk. When interest rates rise, your price will decrease the more time the maturity is. Hold your Treasury bonds until they mature. Only invest in short-term options or construct a ladder with a maturity that matures each year to reduce this risk. Number 10. Senior living stocks. Senior living stocks are safe healthcare investments that frequently withstand economic downturns. These businesses offer long-term care, independent and assisted living, and other specialized programs to the elderly population. The need for these services stays high as the population ages. Suppose you or a family member now use senior care services. In that case, you will likely continue to do so even if the economy is struggling. Long-term care is considerably less likely to be reduced if costs need to drop than discretionary purchases like holidays and new automobiles. This gives senior care organizations some financial protection during recessions. Number 11. Businesses that remove waste. Because humans produce rubbish and don't want it around, waste disposal businesses are often viewed as defensive because this is true regardless of the overall status of the economy. Across the country, weekly garbage pickups normally continue regardless of the economy, making waste disposal a wise choice during a downturn. Some non-essential waste management company services, such as electronics disposal, have slowed down due to the extraordinary nature of the COVID-19 recession and the forced lockdown of workers across the country. Waste management businesses should have no trouble resuming operations when lockdowns ease. Number 12. Walmart. In most recessions, discount merchants rank among the top performers. Consumers still need stores where they can buy necessities, and when money is tight, finding the greatest deal is even more crucial. The COVID-19 crisis has demonstrated, as in previous recessions, that Walmart, in particular, performs well under pressure. Walmart shares began trading in 2020 at around $180. By the end of the trading on April 28, 2020, shares closed at $128, indicating that despite a significant market sell-off, Walmart shares increased in value. Walmart also displayed this pattern of outperformance throughout the 2008 to 2009 financial crisis. So there you go. You have a long list to choose from where you can best invest and earn more. It is wiser to prepare for the worst. We wish you the best of luck. What do you think about this topic? Do you agree with me too? Share your thoughts in the comment section below. Don't forget to like, share, and subscribe. I'll see you in the next video.